Hello and welcome to Unlocking Growth, your guide to small business working capital solutions. On behalf of our president, Ron Busby, our board, chambers, and our staff, thank you for attending. I'm Warren Richard Jr., outreach specialist with the U.S. Black Chambers, Inc., affectionately known as the global voice of Black businesses. We represent over 160 Black chambers of commerce and small businesses and are founded on 5 pillars of service: advocacy, access to capital, contracting, entrepreneurial training, and chamber development. This series was crafted in collaboration with our chambers of commerce, providing technical assistance and resources to businesses across the U.S. with the U.S. Small Business Administration's Community Navigator Pilot Program. Thank you for your assistance in developing and sharing this program. Today, we welcome this discussion on the importance of Black small business owners needing working capital to grow and scale your business as part of our Access to Capital series from the Lendistry experts with multiple years of experience in SBA lending, relationship management, and conventional lending product implementation. Our team at USBC, as well as our 20 Navigator chambers, look forward to being a resource to you and your business as you navigate through this journey. I encourage you to drop your questions into the chat, and we will address as many as possible at the end of each program presenter. If there are any questions we do not get a chance to answer during the webinar, we'll make sure you get those answered and forwarded to you afterwards. As your moderator today, I have over 15 years of experience in the fields of economic development and urban planning, having developed and implemented programs for quasi-governmental agencies. My work involved assisting small businesses with business planning, commercial revitalization, and financial packaging of public and private loan programs to facilitate growth in the small business community. Our first panelist is Chauncey Hightower, Vice President, Relationship Manager. She has a proven track record in relationship building, successfully onboarding top-tier clients and employees for multiple financial institutions. Chauncey's expertise extends to performance management, where she implements strategies that align with organizational goals. She's passionate about providing economic opportunities and progress, growth for small business owners and their underserved communities. She will provide a preamble and introduce the team she has with her today, and then give a wrap-up of the information shared with us. And I just want to say welcome, Chauncey. The next presenter will be, right after that will be Josh Yoon, Senior Managing Director, National Sales Leader at SBA. Josh Yoon is a highly experienced professional with over 20 years of expertise in small business administration, lending, with experience in senior level sales management roles at Velocity, Cornerstone, and Hannah Small Business Lending, among many other SBA lenders. He is responsible for overseeing and managing all aspects of the sales process, from prospecting and client acquisition to deal closing and relationship management. Josh will go over eligibility criteria and get into details of the Lendistry products. Welcome, Josh. And following Josh, we will have Clarissa Garcia, Business Development Specialist 2. She is a loan specialist in Lendistry's conventional lending division, specializing in their contract financing program. Clarissa has been with Lendistry for 3 years. That's a significant number. And Clarissa will present the Contractor and Purchase Order Financing Program, a new innovative Lendistry product. Very interesting, Clarissa. We look forward to that. Welcome. And as a reminder, I want to encourage you to drop your questions into the chat immediately after Josh and Clarissa's presentation. And then finally, you'll get another opportunity right after Chauncey's final wrap up. So be ready with your questions. Welcome, Chauncey. Take it away.
Good morning, team. So, good morning, everybody. And I'm just going to give you a quick overview of Lendistry and what we are doing out in the community. Can you go ahead and go to the next slide, Warren? So about Lendistry, I'm going to tell you a little bit more about Lendistry. Can you go to the next slide? So Lendistry, our mission is to help minority small business owners in their communities to gain capital. We also target markets, and our target markets are minority small business owners in their underserved communities. Can you go to the next slide, Warren? So total in grants and loan, we have dispersed $10 billion, and we've helped total of 634,000 businesses grow and expand. And that number is still growing every single day. And as you can see in the purple, these are some of the states that we are partnered with. And then in the gold, to me, that looks like gold, Warren.
Yes.
It could be yellow. I don't know. I don't have my glasses on.
Okay.
So in the yellow are our Lendistry offices. And then in the gray, I'm guessing that's gray, Warren.
Yes, I think so.
We have our state partnerships. Those partnerships are currently in process. So we're basically trying to take over the entire United States. Can you go to the next slide, Warren?
Yep.
All righty, this is my favorite part. I like to tell some of our small business owners what are some of the criteria. Can you go to the next slide, please? So things to consider before applying for a loan. You really want to think about how much you're applying for. So I like to ask people really think about how much you need to get up and running and be comfortable with. Don't ask me for $5 million and your total revenue is 250. It's just not going to make sense. So you're asking me to borrow 5 million. Your total annual revenue is 250. How are you going to pay me back my $5 million if your revenue is only 250? So those are some of the things that we want our borrowers to consider before applying. You want to actually know what your credit score is. We utilize Experian, so I advise everyone to go and check their credit scores prior to applying for any of our products. And the next thing is, do you have any delinquent or late payments? This is a big one right here, especially if you're having any late payments for a SBA product that you already have, an SBA loan. So if you're late on an SBA loan and you're trying to get another loan, it's just not going to work. I like to make sure that people understand about bankruptcies. I've been noticing a lot that people are coming to us with a bankruptcy that's within the last maybe 2 years. With us, it has to be in the past 5 years. So we're looking at 5 years plus. And how long have you owned the business? This is a really big one. So with us, you have to at least own your business for 2 years. So don't come to me and saying, hey, Chauncey, I opened my business yesterday. Can I take out an SBA loan? Because that's just not going to work for us. And then we're going to go back to what are your annual sales, your annual revenue? Again, don't ask me to borrow $5 million and your revenue is not showing that you can support a $5 million loan repayment plan. And our next one is, have you been profitable the last 2 out of 3 years? If you have not been profitable, those are some things that you may want to think about because again, how are you going to pay us back if you haven't been profitable? So we just want to make sure that we're not setting anyone up to fail. So it's better for us to get the information out right now. What is your estimate net worth? Again, we're going to go back to that revenue question. We want to make sure that you're going to be able to support repaying the loan. What state are you located in? Which is very important to us because some states we're not currently in. So if you're not located in a state that we are not in, we're not going to be able to assist you. How old are you? You at least need to be 21 years of age prior to applying for any type of loan with Lendistry. Josh or Clarissa, did you want to add anything to this part?
No, I think you got the main questions, and I'll cover the rest when we kind of go into our products. That's it.
Okay, perfect. All
Yeah,
righty,
and
Lauren.
you definitely touched upon quite a bit. The one thing I would just say is, make sure that you understand your financials really well. So that way, when you go and apply and we have, certain questions asking about how certain things are, recorded, you'll understand how to answer that. So that's definitely going to be very important as you go into applying for a loan.
Thank you so much, Clarissa. Warren, can you go to the next slide? All righty, so this is where we're gonna actually bring on Josh. Josh is our SBA guru. Josh knows SBA like the back of his hand. Josh has been in the game for a very long time, and the most thing that I love about Josh is still out in the trenches. Just because Josh has this big fancy title now, he does not resist going out into the field still. So Josh, that is what I truly love about you. You are truly a headhunter. So I'm gonna welcome Josh Yoon to the stage.
Thank you, Shante. Thank you so much. Thank you, Warren. Thank you everyone for giving Lendistry this opportunity to just present to the USBC. There's a lot of things going on, and I don't want to bore everyone to death with all the information. So I'm just going to touch upon just the products that Lendistry does. But I really want to focus most of my time on, I guess you can call it our pink orange slide, the SBA 7A program, the working capital deal. So I'll go back to that box after I go over the products that we have. So Lendistry offers both SBA and non-SBA products that you can see from our 8 different products here. We offer our traditional loan credit. These are our traditional term non-revolving loan line of credit. So what that means is, let's say we have a client that has a build out. They want to do, it's almost like it's a revolving line of credit is kind of like a credit card where you use it, you pay it down, you can do it again. A non-revolving is, let's say, a subcontractor or a general contractor got a job for $100,000. We give them $100,000 loan. They continue to draw down until they max out the 100,000 and start the payment then. So that's kind of the difference between a non-revolving line of credit and a traditional revolving line of credit. So a non-revolving line of credit is available at Lendistry. One thing that's really unique about Lendistry being that we're not a traditional bank. We're a non-bank SBLC. We're a CDFI. Is that our loan amount range is very vast. Is that you can see from the boxes below, we will go from 25,000 all the way up to $5 million. So in that way, what's very special about what we do is that we're really trying to reach as many small businesses as we can. That's always been our mission. That's been our president and CEO Everett Sands' mission, is that we want to help out as many small businesses as we can throughout the nation. So that's kind of the traditional non-revolving line of credit. Then we go into our 7A loans, SBA 7A as for those that aren't familiar with that program. It's a small business administration program. It's a guaranteed program by the U.S. Small Business Administration. And it's separated by two different purposes. So the first one is the SBA 7A program, which we've created what we call our smart scoring technology. We call it our scoring process. This is something that Lendistry was one of the first lenders in the country to roll out. We rolled it out in late September of last year. We've been testing it, tweaking it, making enhancements on it. But we're rocking and rolling on this deal. This deal, it caters to all small business owners, as Shansei mentioned in the criteria. If you meet those criteria, I would urge you to apply. Again, the loan amounts go from 25,000 all the way to 500,000. We provide a 10-year term, and it really, any small businesses that are needing to grow, that need working capital to hire employees, cover your normal expansion costs, marketing costs, whatever it may be, if it's used for your business, then it is eligible for the SBA, kind of SBA working capital program. And I'll touch back up on it as this is kind of what we want to highlight. There's the SBA 7A general purpose program, which goes from 150,000 all the way to 5 million. When I say general purpose, anything, again, is if it's business related, we can do it. We can't use an SBA program for personal needs. You can't apply for an SBA loan to buy a home or buy a new car unless it's business related, right? We'll get those questions from some of our clients, like I want to buy an apartment building, I want to buy another house so I can rent it out. That's not it's a passive income, which is very different than what SBA would be used for. So, but if you have a business that you're running, if you're it's been 24 months, you need additional working capital to, let's say, refinance some debt, buy some new equipment, buy inventory, purchase a new business acquisition is available, right? And then also real estate. Real estate is available, the real estate program. I'll go into the details of it in the next slide, but if you want to buy the property that you're currently leasing, you have an opportunity, your landlord saying, hey, I'm going to give you an opportunity to buy the building. If it's within 150,000 to 5 million, Lendistry can definitely assist on that. The bottom four, which Clarissa will kind of go into, is kind of what we call our core loans, our non-SBA deals. Lendistry is one of the founders of this airport concession lending program. So we specifically finance concessionaires in the airport industry. So if you are in that realm where you're trying to set up a business in a major airport, please, you can apply at Lendistry. We can assist you in that program. We have a commercial real estate loan program. This is kind of where it's similar to the SBA 7A, but there might be some eligibility criteria that you might not meet in the SBA program that we can assist you under our normal CRE program. Contractor and purchase order financing. This is kind of Clarissa's specialty that she'll go into, but we've also rolled out a special program for those general contractors or subcontractors. If you have purchase orders, you have contracts that you've recently landed from big purchase jobs with the city or the state, Lendistry created a faster, a more expedited process to help contractors from 50,000 to all the way up to $1 million to get financing. It's kind of it's unique in that what we've done is we've looked at our small businesses that we've assisted throughout, the 7 years that Lendistry has been around, and we've kind of figured out rather than creating one huge box that we're going to try to fit everyone into, we've basically made eight verticals, you can call it, where we can get really, really specialize on the needs of our small business owners and find a product that's going to fit their needs. And lastly is a small business loan fund. This is new. We got into it last year. For those, if you've heard of New Market Tax Credit, but it's a really special program to support the low income communities, right? If you qualify in the New Market Tax Credit, there's a website where you can put in your zip code and your address, and you can see if your business is zoned for the New Market Tax Credit. It's probably one of the best programs to get into. We can do loan amounts from 150,000 to 4 million, but it's the lowest rates that you'll see, just because it's a special program that we're we're participating in with the state. So that's the 8. Warren, if you can go to the next slide, I'll go into the details. I'll just kind of cover the high level points of what's going to be needed. And Chauncey covered most of it. I want to just touch upon a couple of things. As you can see, what I want to focus in is on a few lines, right? So the first line will cover the loan amounts. You can see and I'll cover the first column. I'll spend a little bit more time on the first column because that is what we're seeing a lot of activity from our small business owners. This is kind of your working capital. This is our Smart Score technology, and we're able to close these loans within 5 days. But it's been a game changer because as for those that are on our call, I'm sure most of you have experience with working with traditional lenders. The typical turnaround time for a small business loan can go anywhere from 60 to 120 days, right? And the way that Lendistry looks at it is customers don't, or our business owners don't have, 2 to 4 months to wait for capital. They need they're applying for the loan because they need it now. They need it in the next 2 weeks. As you can, it's business is all about seasonality. We're looking at, okay, the summer months are coming. It's spring break. I need capital now. If you need working capital to hire employees, I just landed a big contract. And how do I get more capital? The 7A working capital loan is kind of your path. So 25,000 all the way up to 500,000. Our minimum FICO or minimum credit score is 680. As Chauncey mentioned, we do follow the Experian. So if you're curious, you can go on the Experian website. You can pull up a free credit score and see what your score comes in at. The minimum time in business that we're going to need is 2 years. You can see kind of the use of proceeds that we can use as working capital, equipment purchase, inventory purchase. Those are kind of the 3 useful purposes that we can use under this program. The rates, everyone wants to know what the payment's going to be. So we follow the Wall Street Journal prime rate. So it's going to be the Wall Street Journal prime plus 4.5. As you know, the Wall Street Journal prime does change kind of on a quarterly basis. So you can kind of go into that. You can take a look at it. Right now, as of today, the Wall Street Journal prime is at 8.5. As I don't know if for those that follow, the Federal Open Market Committee said, we're anticipating probably 3 rate reductions this year. So that it's a good thing being in that you're on a variable rate program, you will go down. The term, it will give you the maximum allowable term that the SBA allows, which is 10 years. That's really beneficial for clients because your traditional banks will give you typically 3 to 5 years on your loan. So what we do by doubling the term is that your payment will be cut in half, right? I'll jump down a little bit is that there's no prepayment penalty on the scored loan program. So what I recommend to all of my clients is get the loan, get the funds, within 5 days, and then you can pay it down as fast as you can take the whole 10 years to pay it down. If you have a great 2024, then you can pay it down earlier. It gives clients that flexibility to really do what they want to do with the funds that we give them. Some of the documentation that we will need, you can look into that slide. I think it's a little formatting was maybe a little off on the presentation, but one of the recommendations I would say is before you apply to have these documents ready, it will make the process quicker because once you fill out the first 2 pages of your application, the next page, what we'll go into is what we'll request for the documents to be submitted. We are asking for 3 things. So 3 years business tax returns. We ask for that. We ask for 1 year personal tax returns, and then your business bank statements. Those are really the only 3 things that we need to make a quick decision on whether we can qualify your business. The credit report, we do a soft pull on it, so there's no inquiry. People, for those that might worry, hey, I don't want Lendistry pulling my credit. There is no hard pull. It's a soft pull when you apply on our site. So we just get a glimpse of it, but our system will be able to calculate whether or not you can make the payments based off that. And then you have your 7(a) general purpose, and then you have your real estate. It's pretty much the same, only it's separated by the purpose, right? So your general purpose, the use of proceeds expands. You can go business acquisition, equipment purchase, you can do debt refinances, you can do leasehold improvements. So if you're looking to do some renovations to your existing business, you know, that's where it would fall into. There's a lot of debt refinances going on right now. For those that are familiar with MCA loans, the merchant cash advance loans with OnDeck and other companies and Kabbage, people don't realize what they apply for and then realize that they're getting charged a daily interest rate. And when we do the calculations, they're surprised because they're paying a 60-70% annual interest rate because they're taking out the money daily. You know, we're refinancing a lot of those, and just by doing that, we're saving customers thousands of dollars on their monthly payments. Just, you know, so Lendistry, really our focus is trying to figure out what's the best product that's going to fit our client. And then the last column is the real estate slide, where we can buy real estate. If you're looking to buy a building to no longer pay rent and you want to be the property owner in that your business occupies, it's a great option. It's a 25-year fully amortized loan that Lendistry can offer. And these are basically the three main verticals and purposes that the SBA product allows. We can go to the next slide, and I can take some questions after that, Warren. The next slide is as I mentioned, is our non-SBA product. It's our traditional term loan. There are times where it does not fit the SBA box. We have what's called our Micro Express loan. These loans actually fast a little, even faster than the SBA loan. They are funding right now within 48 hours. So if you don't qualify, what we call it at Lendistry is to call it one funnel, meaning that when you apply, it's for those that are familiar with applying for a credit card, when you go on the Lendistry website, you create your username and password and you make the application. Once you apply and you upload the document, you could get one or up to 3 different offers. And that's what we want to provide to the client, is we want to give them an opportunity for, the credit cards do that. When you apply for a credit card, they'll say, this is your lowest interest rate one. This is your best for debt refinance, and multiple. So what we do is we try to give our clients, if they qualify, we'll give them all the offers. We're not trying to steer them in any way. We give them, 2 to 3 options, maybe anywhere from 1 to 3 options, and have them make that decision. So the traditional term loan that we can do that's Core Micro Express. It goes up to 2 days. We'll go the same thing. It starts at 25,000. The FICO, the minimum credit score is a little bit lower. I don't know why this one says 6. I'm seeing a weird number, but it's 600. It's 640 is the minimum FICO score on that. And then this one is a 5-year term versus the 10-year term on the SBA. And then lastly, there are states that we are currently participating, as Shansei mentioned, under the state program or the SSBCI. So on the bottom, you can see right now we are participating in state guarantee programs in Arizona, California, Colorado, Illinois, Louisiana, Maryland, New York, and Virginia. So those are if you apply, if you're a business in those states, you'll also get an opportunity to get an SSBCI program, which is an awesome program that states provide. And then, as I mentioned, the non-revolving line of credit is another product. I don't know if I have another slide. I think there's one more, Warren, or there's a couple more actually.
Yeah.
I won't go into the details of the other ones. I know you can share this deck with other clients. I don't know how am I doing on timing, Warren?
You're doing good. Doing good.
Okay. Do you want? I know I saw a question. Do you want me to try to answer that question?
Yes. This is the actual. I think this is the actual. No, you have this one as well. So
yeah. Well, I can go into this real quickly before I answer it. So airport concessionaire. Going to the details of that is, as I mentioned in the product slide, is we have a specialty program just for airport concessionaires, right? It's a 50,000 to 3 million, 640 FICO, 2 years in business. We offer a 10-year term. And you can kind of see the capital requirements, because a lot of the loans that are applying is you know, it's a new space. They're trying to enter into a new location. And then new market tax credit, as I mentioned, is the biggest thing is you want to make sure that the business is located in a new market tax credit census tract. So you can go to the new market tax credit website and put your address in. And you know, the terms on this is awesome because this is probably our lowest FICO program. It goes down to 620. So 620, 2 years in business, and you can get a loan up to 5 years. And then lastly, our contractor purchase order financing, 50,000 to 2 million. Well, basically what we're doing is we're advancing 20 to 30% of the contract value. Because what that does is what's key for that is for those contractors or subcontractors that are on the call, you know, that the first 30 days or the first 30% is the important part because that's when you need to buy all your material, you need to hire your employees. You finish the job, and you know the state will typically state programs will pay you within 90 or 120 days after you've completed it. So what we've created was that contractor financing program will give that advance for the first 30% of the purchase order. We give the capacity and the capability of our contractors to buy all their equipment and their material, hire their labor, and get that contract going so they can get paid on the rest of the 70%. The term on this is because it's a contract program, it's the first 6 months is the period that they're finishing out the contract, and then they would pay that over 2 years after that. And
Well,
all
okay,
right.
awesome. So great. So we'll take advantage of this break, Josh. Let's see the questions that we have that came. I think the first one came from Carlton. He said that in a scenario, a business generates $350K annually and wants to pursue a $2.3 million opportunity.
Yep.
For example, residential treatment center. While they understand requesting a loan near their current revenue, they need funding for this larger project.
Right.
What loan options or alternative funding strategies are suitable?
So this is a unique, I guess this situation is something that we do come across, you know, where a business is generating an X amount in revenue. If there is a larger opportunity, if you're purchasing, let's say if you're trying to purchase a $2.3 million residential treatment center, what we will do is we will analyze the borrower's current business plus the new business that they're going to be purchasing, right? So if I am buying this residential treatment center, this would be a change of ownership. So you're going to be purchasing that business from the seller. So from that seller, we would request the 3 years tax returns, see the revenue that the business is making, and we would combine it. And you know, it's as Shansei said, what we're trying to figure out when we do our lending is very simple. We lend out money to small businesses, and we're making sure they can pay us back, right? So if they're purchasing a business for $2.3 million, number one, that business is making some cash flow. They're definitely, you know, generating revenue. Where we want to see, can they pay us back? So we'll look at the financial statements and the tax returns from that business that they're going to buy, and we'll do our cash flow analysis on it, and we'll let the client know if we can help them out on that. So for Carlton, yeah, if you have that opportunity, go ahead to our website, apply. One of our business development specialists will reach out, collect the documents, and we'll kind of walk you through the steps and see what program we can get for you. And there's one more question.
That was a good question, Carlton.
That was good.
Yes, and we have I think it's Zuleika. I hope I said that correctly. For the real estate, are the interest rate fixed, and do you need to be certified? And
no, so our real estate program is not fixed, unfortunately. The way I treat the SBA program for those that have purchased homes It's kind of like a if the homes have a program called the FHA, which is kind of like the first time buyer program. So the SBA is kind of in similar because it's a program made by the US Small Business Administration to support small business owners grow and expand. So it's a variable rate program to purchase the building, but what's special about it is that the prepayment penalty on an SBA real estate loan is only 3 years. So what typically happens on our customers is that we'll help them buy. The loan to value on a real estate purchase is 90%, meaning that if you were, let's say, if you were buying $1 million property, you would only need to put 10% down. You would put 10% down, we would finance 90%. And what happens is that if you compare it to your traditional conventional loan, I was just talking to a banker this morning, they're looking at 65 to 70% loan to value, meaning if you're buying that $1 million property, now they want you to put down 300,000 instead of, 100,000. So in essence, we're saving them the 200,000. What they can use that money is to build their business, grow, maybe make some renovations. And what typically happens with our clients is once the prepayment penalty period ends, their tax returns have increased, their business revenue has increased, and additionally, their property value has increased. What they will do is they'll refinance that loan into a long-term fixed rate product.
Okay, awesome. Thank you so much, Josh. Let's see. I think we have. Well, we have a question from one of our chamber leaders.
Yeah.
Anthony asks, does Lendistry offer any credit counseling and or repair that would assist a member applicants in reaching the prerequisite credit scores?
Yeah, it's a great question. We have Lendistry has our nonprofit arm called the Center. And Shanta, you can share that information. Warren will share it, so you can share it with the members here. Is the
Awesome.
Center? It really is our nonprofit arm that helps small businesses kind of get ready to apply for a loan. They'll offer counseling. We don't do credit repairs per se, but we will teach them like the things that they would need to work on. And I know there are credit repair businesses that help out, but the Center gives a lot of guidance. It's kind of like the SBDCs and the TA centers, but Lendistry has our own called the Center, which we can share the information with. Okay,
awesome. And I just want to add to that. I know that we are working on, USBC is working on connecting through the resource desk that we have this portal, if you will, with Lendistry USBC to make sure that anyone that needs further assistance, even if they have applied and say have turned down, and they need some additional help, there will be opportunities to connect to other resources that are connected to the portal. So that's another way of being able to get counseling and technical assistance to get to that level of being able to be successful in acquiring and getting the loan. All right, so I think we should move to the next one. We're doing pretty good on timing, and I think that I think there's another question that came back. Oh, you're welcome, Tony. Let's see. Oh, yes, I think Zuleika came back and asked another question. She said, I've had SBA in the past, but when the interest went up dramatically, any products available on a fixed interest?
Under the SBA program, we currently do not offer one. But if they are, Clarissa, I think there's a fixed rate option on the core side. Oh, she's on mute. Oh, I think she might have, we might have lost her, but
okay.
Yeah, so under the SBA program, we don't have a fixed rate product, unfortunately, just because we would love to offer something. We're not a bank, so we don't have the luxury of offering too many fixed rate products. But there are some fixed rate options under the traditional. So what I would recommend for Zelenka is to apply, and we'll see what we can do regarding offering our fixed rate product.
Thank you so much for allowing me to be unmuted. I'm not sure if you can see my video. What happens is that I've had SBA, like I mentioned, I had SBA in the past,
Right.
and I prepaid my SBA loan twice because at the time that it happened, the interest rate had gone up tremendously that really altered my monthly payments.
Sure.
And so, I mean, even you don't have something now, if it's something that at some point it can be considered, because as a small business owner ramping up, I did a whole build out twice. One SBA loan was for $250,000, another one was for $500,000. And when the 2008 market crash happened,
Yeah.
I was ahead of myself, thank God, in making the payments because that made me really nervous. But I know that there are some SBA lenders that do give you a fixed interest rate. So even if the fixed interest rate can be a step process, meaning you're fixed for 3 years and then fixed for another 3 years, and then fixed for another 3 years, I know that the SBA gives the lender the opportunity to structure it in a way that they feel best suited for their business as they use a bank to do the bridge. I would just say that should be something, or maybe that could be something to be considered.
Yeah, no,
Because
definitely. Thank you for that. Like, yeah, we are exploring that option, and we're working with other partners and other funding sources to hopefully offer a fixed rate product, toward maybe the end of the year, and that would be a great rollout for us. And we'll definitely keep the USBC aware of the new products that we continually roll out. Lendistry is we're new. We're continuing to start every quarter. We have new product that we're working on. So there's going to be a lot more to come.
I appreciate that.
Awesome.
And just want to let us
Awesome.
know that the first 3 years is so critical for small business. So I
Okay.
appreciate you. Thank you.
No problem.
Thank you, Zuleika. Thank you so much for that question and jumping on and sharing that with us. Thank you. All right. So I think we should move to our next speaker. Clarissa, take us away.
All right. Thank you guys so much for having me here today. So I'm Clarissa Garcia. I'm a business development specialist here at Lendistry. So my role is when you complete that application, I'm the one that's picking it up, processing it, calling you, and helping to package that request. So what I specialize in on our as far as our programs is our contractor financing program. So it is. Can we actually go to the next slide?
Sorry.
So what it is it's a new innovative Lendistry product. We actually launched it early last year. And what it is it's geared towards assisting companies with servicing their active contracts with either a government agency, a quasi-government agency like a municipality or a utility, or a general contractor that holds that type of contract. So subcontractors, this is really a fantastic program for. So while we aren't able to look, while not all contracts will qualify, we are able to look at construction projects. So anything that's building infrastructure, residential wouldn't fall under that, but any kind of construction type of builds, purchase order fulfillment. So as long as you have that executed purchase order contract, that's something that can qualify. And then a service contract. We've seen where these work very, very well. We have a lot of companies that have come in that have needed just mainly payroll just to execute what they need to do for their project. And this has been able to really come in and lift that. Go to the next slide. All right, so it does vary slightly what we're able to advance depending on the contract. So for construction-based contracts, we will lend up to 30% of that verifiable contract value with a max of 1 million. Purchase order, service agreements, those will go up to 20% of the contract value with, again, a max of 1 million, so whichever would come first there. Now, the payment plan, it is actually completely based on the contract itself. So the really great part about this program is Lendistry actually doesn't ask for a payment until you start getting paid. So it's really geared towards bridging that gap between when the contract starts versus when those contract payments actually begin. You know, Josh touched upon it really well. For a lot of those state and federal programs, you're expected to start right away, but you're not going to be seeing any payments for sometimes up to 90 days, 4 months. And that's where this program is going to come in. So it's going to be based off that payment frequency of the contract. So if it's going to be net 30, but if that net 30 doesn't start for about 90 days, that's totally fine. So what we're going to do is we're going to structure it as a non-revolving line of credit. So similar to what Josh kind of touched upon, it's a little bit different from our standard non-revolving line of credit, because unlike when you fully use it, you start making those payments, you can start having access to that funds right away. But when your contract payments begin, that's when we're going to start taking a payment. So it wouldn't actually, your repayment's going to start prior to you using up all of the funds. Now, with that though, you can take multiple disbursements, or you can do one large disbursement all at once. So you can kind of utilize it again as a non-revolving line of credit with multiple disbursements or just one at a time. Now, one thing that's kind of unique about this product is we actually create an interest reserve rather than deducting it every single month. So since there isn't a set monthly payment per se, because again, it's going to go based off that contract schedule, we're going to create an interest reserve. And so for the first 6 payments, or the first 6 months at least, it's going to accrue over that time. At the end of your loan, whatever has accrued in interest, we're going to deduct it from that interest reserve. Typically, there's actually always a little bit left over in that reserve. So we're going to send whatever's left over right on back to you as well. So what we do is when those payments start funneling in, we create a sweep account in your company's name. The payments will go to that account. Lendistry takes its portion of the payments, typically a percentage, and then we remit the remainder back to you. So you're always going to get a portion of that payment that you're still getting, and then that little bit left at the end. Interest rate, I'll touch upon that a little bit. So interest rate, it is risk-based. Similar to what Josh was saying, we do go off of the Wall Street Journal Prime plus a spread. So it's typically about a spread between 4 to 7% from Wall Street Journal Prime. There are a couple additional fees involved with this one because it is, again, a non-revolving line of credit. So there are those transfer fees. But otherwise, we actually are going to be looking at projections for this. So I saw that there was one question in there where he was saying that they were pursuing I believe like a contract or a larger type of contract where it was maybe a big bid. So that's where this would kind of come in as well, where it'd be super helpful. Okay, now we can go to the next slide. Okay, so this just kind of breaks it down a little bit further. So like I mentioned, not all contracts will qualify, but we have the ability to look at service-based, purchase order, and construction-based contracts. We're going to leverage that contract to as our main source of collateral to lend 20 to 30% of that contract value. The minimum that we will lend is $50,000. So that is one thing to keep in mind when you're looking at your contracts or when you're looking at bidding for contracts. There are certain thresholds for this program. For construction-based contracts, they should really be about 180,000 or higher, just to give that little bit of wiggle room right there. 30% of about 180 is going to be right over 50,000. So you want to give yourself that wiggle room. Same thing with purchase orders or service-based contracts. We'll do 20% of those. So when you're looking at the contracts that you're wanting to service, they should be, for those types, should be a little over 200,000. So just some things to kind of keep in mind there. As far as terms, that too is going to be based on the contract itself. Contracts should be a minimum of 6 months or longer. I usually say that too, give a little bit of wiggle room, 7 to 8 months. That always kind of helps, unless you're going to really be applying ahead of time and giving yourself that wiggle room. But they shouldn't be perpetual. So they should have a clear start and end date. That's how we're going to be structuring that repayment schedule. It's going to range between 6 months to 2 years, again, going in align with how long that contract actually is. As I mentioned, Lendistry doesn't take any payments until you start getting paid. So you have that breathing room in between starting your contract and getting those payments in. We're going to establish a sweep account in your company's name. So when those payments do begin, they're just going to funnel to that account first. We'll take our portion of the payment, then we're going to send the remainder back to you. We establish that 6-month interest reserve. We typically are establishing that within your first payment that you make. So when that first contract payment comes in, we'll be filling up your interest reserve with that. And so that way it is going to be filled for the life of the loan. At the end of the loan, whatever interest accrued is deducted from there, and then we're going to send you that difference on back as well. So as I mentioned, rates are based off the Wall Street Journal Prime, but while it is risk-based, we are looking at the historicals of the business, but we're also really underwriting that contract and the contract vendor. So that's why it is important to make sure it's with a federal or a quasi-government type of agency. It's very important to get those projections put together well, because maybe your company, this was your first time landing this really big contract, and prior to that, maybe the cash flow wouldn't necessarily show that, but we can see based off the contract and the projections, how that's really going to change the income and the revenue to your company. So we're taking into consideration a lot of those things, especially if it is your first time really landing those super big contracts. So last thing, so for us, as I mentioned, that contract isn't, it means it's not a matter of if we're going to get paid, just when. So we're able to really leverage this contract with that this program with that in mind. Okay, and then the last slide. So just some things to keep top of mind. For this program, the minimum FICO is 640 or higher. We do require all owners that have 20% or more ownership in the company to be on the to be on the loan. Same FICO applies as well. Minimum 2 years time in business with supporting tax returns. We're going to ask for 1 to 2 years month-by-month projections with supporting assumptions. It's very, very important to have these put together properly, along with those supporting assumptions. So we see the contract, but also give us some dialogue in there on how this is really going to be changing things. Maybe there's some other contracts that this is going to set you up on. We're going to take all of that into consideration. Right now, you do need to have the executed contract. We aren't doing any pre-qualifications right now, although you can always reach out to me and I can take a look at your bid and see what we could possibly do for you once it's executed. Contract lengths, like I mentioned, they should be 6 months or longer. There needs to be a very clear beginning and end date. So if you do have some of those longer contracts that maybe span 5 to 6 years, we can look at statements of work in between there. Those are those thresholds right there that just to keep in mind. Contract payment should be either direct deposit or wire. There's no checks that we can support at this time. It's definitely something to really keep in mind if you have anything with school districts. They tend to do a lot of checks. But when you're looking at bids, that's one thing to consider. Do they have the option of paying you ACH or doing wire instead of check? So we can, again, set you up for success there. And then that should be the end of my slides. Yes.
Alrighty, Clarissa, you got to say my favorite part about this program. How many contracts can you do?
Well, we can do unlimited contracts. So there's different, you'll have a different application per contract, but right now we can go up to 1 million. And then we're always looking to push that threshold. So yeah, we can do multiple contracts, separate applications, but multiple.
And I did drop the center's information inside of the chat.
Awesome.
Alrighty.
Awesome. Shansei, excellent question. I really find that this program is truly an innovative program. Clarissa, how long has the program been out? And what have you seen so far in terms of I don't know, closed deals or how many businesses are taking advantage of it?
We've had lots of businesses take advantage of applying. The main thing is just really having the qualifiable contract. So we need to have those contracts that are, meeting that minimum contract value and that minimum contract time. So that I feel like has been the only challenge really facing so far is we just really got to get those types of contracts in. But otherwise, it's been launched for a little over a year now. It's been really, really helpful in a lot of different sectors that we've gotten those applications through. We've had some clean energy come through, some VA work come through. So a lot of really great stuff to be proud of.
Awesome. Awesome. All right. Well, Shansei, do you want to really quickly do a wrap up if you'd like?
I wanted to say that LA has a lot of money coming because of the Olympics, and we want to make sure that minority business owners are taking advantage of those contracts. So that's why we're trying to push this contractor program because, we want to tap into that market as well. And thank you so much, Clarissa and Josh, for speaking. I told you guys they are the gurus here at Lendistry when it comes to our products. And we spoke to you guys about our mission. Our mission is to help minority business owners to gain capital. We went over our products and we gave you a breakdown of criteria that's going to get you qualified. And I just want to make sure that I tell everyone, make sure you have your documents prepared prior to applying to our programs. Once you have those documents at your fingertips, that's when I will advise our business owners to go in and apply for our programs. Because like Josh said, you can get pre-approved within 24 to 48 hours and you can get funded as fast as 5 days. But we can't get that done if you don't have your proper documents, and we have to reach out to you constantly to remind you about getting those documents. But what I will remind you of is, hey, you said you wanted to get your funds within 5 to 10 business days, but we haven't received a document. So help us help you. And I'm going to push it back. Oh, before I forget, if you have any questions or if you need anything as far as you get stuck on your application process or anything like that, you can always reach out to me at shawnse.hightower@lendistry.com. And I do like to take deep dives. Sometimes I do reach out to our borrowers to see what's going on and why we haven't received the documents that we need, because we really are trying to help our community to get to the next level. So if you have any questions, please reach out to me. I don't care what the question is. You can ask me, hey, Shante, how many contracts can I do? Hey, Shante, what is the minimal FICO score? I want to make Clarissa and Josh's job easier, and we want to fund as many minority small business owners as we possibly can. So please help us help you guys. Make sure you have a complete package in front of you, all of your documents, and have them ready to upload. We do utilize AI to help process our loans faster. So hey, help us help you guys. And again, thank you, USBC, for allowing us to come and speak today. I truly appreciate it. I'm going to kick it back over to you, Warren.
Thank you so much, Shanse. That is awesome. Oh, wow. This has been an awesome presentation. Learning the details of the lending products with Lendistry. I just want to say that this is the second time I heard about the new market tax credits. Josh, I know I think you mentioned about that. I just wanted to say that is definitely a resource that can be added on to the benefits and of the programs that you offer. Is that correct? Yeah.
Yes, I mean,
Okay.
that's a, if your business, like I mentioned, is in a new market tax credit zone, that's definitely a program that you want to, as a business owner, if you're looking to purchase real estate, definitely take advantage of that program.
Yeah. So all they had to do is just Google that, so that they can get access to that site, right?
Yeah,
Okay. Yeah.
I
I would
I
definitely.
can have Shanse send that over to you.
Okay. Awesome. Awesome. Well, I think that is awesome. I think the next slide we are okay. Yes. So I think we've pretty much run out of time. I know looks like we might have a couple of questions left. Amazing platform. Will the slides be available? We will be sending some additional resources, particularly from the Lendistry team. And it will probably include some of the information that are in the slides. But yes, and how do you access qualification for the market tax credit? Okay, so yeah, so that's what I was saying. I think that's something that you have to kind of do a search. But I think, Josh, you said you'll send that the website. So we will definitely pass that on to everybody as well.
Yeah.
To learn more about that opportunity.
Right. So what you want to do is, you want to Google you'll put your address in the new market. If you Google new market tax credit tracker, there's a website does come up. you would put your address in there, see if you do qualify in that zone. And then if you do qualify, then it's the same criteria kind of per our slides that you can apply just like a business or a real estate loan. And, you'll benefit from the lower rates from the new market tax credit.
Awesome. Awesome. Thank you so much, Josh. That is excellent. And just want to thank everyone for your attention and your engagement of this great information that the Lendistry team has shared with us. Thank you so much. As I mentioned, if you missed the welcome at the beginning of today's webinar, we indicated that any questions we did not get a chance to answer during the webinar, we'll make sure to get those answered by them and forward it to you after the webinar. We invite you to give us a feedback on today's session. Just scan the QR code that you see there on the screen and type in surveymonkey.com/aura/biz, B-I-Z, future. I want to thank again you for attending Unlocking Growth, your guide to small business working capital solutions. This was possible through our work with the SBA Community Navigator Pilot Program, in part through a grant with the U.S. Small Business Administration. A tremendous thank you to our Lendistry guest speakers, Chauncey Hightower. I love that name, Chauncey. VP of Relationship Manager, Josh Yoon, Senior Managing Director, National Sales Leader, SBA, Clarissa Garcia, Business Development Specialist 2. And I want to give a shout out also to Elisa Joseph, USBC's VP, Director of Programs, and to Carrington Eubanks, Senior Managing Director of Strategic Partnerships with Lendistry, for their tireless work working on this USBC Lendistry portal, boosting opportunities for underserved entrepreneurs with this new lending portal. And we want to thank our Community Navigator Chambers for advocating for Black businesses, and to you, our viewers, for sharing in this valued discussion. I want to introduce everyone to USBC's Introduced a Buy Black, the only Black certification program with a business directory, providing businesses that certify access to private and public procurement opportunities, highlights, and other benefits. This online program can help prepare you for the contracting space as a documents preparation guide. Certify today by visiting usblackchambers.org/certification. And join us for upcoming events. April 4th, we have at 1 p.m. Eastern Time, Verizon Small Business Digital Ready program. We encourage you to join us for this Verizon Small Business Digital program, an exciting online event designed to help small businesses thrive in the digital world. Whether you're just starting out or looking to enhance your knowledge and gain insight into running a successful business, this program is packed with valuable insights and practical tips. During this event, you'll gain access to Verizon's portal, offering key resources like free online courses, expert coaching, one-on-one mentoring, and peer networking, and at times even grant opportunities. And that's April 9th. I'm sorry, that's, yes, that was, I think it's April 4th, I'm sorry. And then April 9th, you have Get Results, preparation for 8A business development. That's our next webinar that's going to live. We're going to be having government, SBA, and private companies a company that will be speaking with us, both public and private, focusing on 8AA program. And what's important here is that during that time that we will have a contractor that has gone through the 8A program very successfully and doing very well currently, this lady has things to share to make sure that you learn some of the things that she learned. So she will be passing on that information on that webinar. And then April 16th, we have Watch Party Going to the Next Level, a successful hiring and cash flow strategies, where we have SCORE mentors will share strategies on this popular topic. For more events like these, regularly visit and certify for upcoming events at usblackchambers.org/webinars. Follow us on social media at usblackchambers.org. And if today's forum prompted additional questions and interests, feel free to contact us at programs@usblackchambers.org. Thank you for joining us today. Have a great rest of your week, and a great day today. Thank you so much.